You're listening to REIA Radio, the nationally trusted name in real estate investing. We dig deep to discover investors' why in real estate. If you want to skip all the BS and get in investors' heads, you're in the right spot. Be one of the thousands to check out REIARadio.com. This episode is brought to you by Timber Creek Virtual.
At Timber Creek Virtual, we don't just keep your business running. We take it to the next level. Our virtual and executive assistants handle all the everyday tasks so you can focus on what really matters, growing your business. Need clarity on your financial performance? Our expert bookkeeping services keep everything organized, so you always know where your business stands. With our seamless transaction coordination, you never have to worry about the details. Just close the deal. We've got you covered with cutting-edge digital marketing, proactive lead generation, and expert acquisition management. Plus, we handle the cold calling and messaging too. Let us handle the big C work so you can handle your business. Visit timbercreekvirtual.com/services and see how we can make your business soar.
Welcome to REIA Radio. This is the Real Estate Rundown, episode 182 with Owen Dashner and Ted Kaasch. You don't like my drawn out ones, huh? You're like,
no.
Hurry up.
Yes, it's, yeah. Like, can you imagine somebody tuning into this for the first time? They're like, what the hell am I listening to?
What about the person listening for the 182nd time?
Now they know how annoying we are.
Yeah.
By now, they just like it.
So you're saying that that's the reason we don't
Yes,
get any new
it's
viewers,
all
huh?
about your intro. Man, come on, get dialed in, buddy.
Do you want to do the intros going on?
Nope,
Okay.
I'm good.
You sure?
Yeah.
I'll let you have it. Oh, there it is again. The finger
Come
spin.
on.
The finger spin. What is up, buddy?
Did you know that Kanye West was recently in the news for taking out a gigantic hard money loan on an investment property in California that he bought?
No.
So this,
Why would that make the news?
I don't know, but it was on some obscure like British publication where they, it's probably like TMZ for America or whatever, and they're like, Kanye West takes out risky loan to buy investment property, and it was like, I don't have it pulled up here, but yeah, he bought some like $35 million house in a really exclusive neighborhood in I want to say it was like in and around Beverly Hills, somewhere around Los Angeles. That's a nice area. And I guess he took out like this $15 million worth of hard money debt. And I don't know what the outcome of that was. It may still be in process, but I was like, even the stars use hard money.
See?
That's my new tagline for liquid lending.
You ever seen the outfits that guy wears around?
He is bizarre.
He wears these huge outfits and like things that you would see on a runway that you like. Nobody'd ever wear that in public. No, Kanye wears it, or his wife will wear something that's completely sheer and see-through.
Is he married again?
Yeah, to a somebody that looks just like the Kardashians. She's a professional model. There's
Sounds right.
tons of controversy around that, but really good-looking lady. But the way they walk around is just nuts.
Yeah. So I just thought that was hilarious, like reading through the article on that. If you go out to the Googles, it'll be just Google Kanye West hard money and you'll see the article. But pretty entertaining because you would never think a guy like that, like, what are you doing, man? Why are you putting the time in and borrowing money and trying to be a real estate investor when you don't know anything about it?
Something like that. I just wonder what they're doing nowadays. Like you're not really making new music, so you don't have new money coming in. You're getting your residuals, obviously.
Dude, I bet that guy just cranks out like collab stuff. Like he'll just record tracks and then you can sell it to other artists and then you can do little collaborations with them and stuff like that. That's how all that works, I think. But it'd be interesting to get somebody in that type of, aspect of the show business in, like somebody, a big, mogul in the music industry, or, you and I were talking before we hit record. I'd love to get a current or, former well-known professional athlete on the show. Anybody catching this episode, if you got a hookup with somebody like that might be a good podcast host, we'd love to be introduced to him.
Terrence Crawford would be a good one. He invests a ton of money in real estate.
Bud Crawford, yes,
local and great guy. I've met him. I did lunch with him a few times back in the day when I had my charity.
Okay, quit bragging and make it happen.
Yeah,
all right.
I don't have his cell phone number, but I think I can make a phone call or two.
You guys must be tight then.
I'd say
lunches with him a couple.
I
of
do
times.
not have
What's his number? I don't have it.
I do not have his cell phone number. Elizabeth Edwards had
was my partner on that, and she's the one that coordinated all that. So I'll have to reach out to her.
Okay. I'm looking through my notes here about like topics, and I wrote down hookers and needles for our upcoming episode on Wednesday this week with Tapan Trivedi, who's stay tuned for that. He's a funny guy, although we didn't really get into the jokey part of his career, but spent time as a software engineer, stand-up comedy, met a bunch of really famous comedians that you probably know and love.
Like Robin Williams,
Yep.
Joe Rogan.
Yep, Dave Chappelle, and tell some funny stories about that, and then got into real estate investing, and then created a software company like, everybody does.
Yeah.
But real interesting guy out of the Sacramento, California area, owns his own REIA, or did for 14 years, and then ended up getting out of that. We talk about like why and how you start a software company, how much you can potentially sell it for once you get it off the ground and into an actual business. So yeah, stay tuned for that upcoming episode.
The question is, could you sell your hard money company for more than a software company?
No, the multiples are different. Yeah. Generally you go off of net revenue, or you go off of EBITDA. Is a lot of times how they do company valuations, but it could be off of earnings. So every industry has a different multiple that they go off of. Like 5x is a pretty common one, but it all depends too. Like if you're starting a lending business too, like how many of your customers and investors that put capital with you are going to stay if somebody else bought it. So that's a big factor that you got to take into consideration when you're either buying or selling. So that'll affect your valuation pretty wildly, right? So. Believe me, we talk about it a lot. Like, so we've grown so quickly. I mean, we've doubled in size every year that we've been open, and we're looking to do that again in 2025. So we've talked about what a potential exit looks like. Like every once in a while, we'll be sitting around and be like, "Hey, what would you sell your share for?" Just curious. We talk about that stuff constantly.
You guys ever making offers in house?
What do you mean?
Well, maybe I can buy your share. Maybe I can buy your share.
We bought a partner out.
Yeah, I remember that.
Yep, and that was an interesting exercise to go through. And he was kind of in a position where he didn't really have a ton of options. So I felt like we got a pretty good price for the remaining ownership, and I took less than the rest because they were all butthurt about not owning as much of a percentage as Brandon and I did. Kind of funny, but anyway. So, what have you been up to this week, dude?
Well, speaking of Brandon, I reached out to Brandon this week and I was like, dude, why don't you come on the podcast? It'd be kind of fun. I thought I had him. He hasn't said no. He said he just needs to work around the schedule.
You listen, Brandon will not say no. He will just tell you enough to where you think there's still a chance at anything.
Yeah.
And then he's not doing it.
Yeah.
Like that is his no.
I'll get him on.
Yeah.
I'm going to get him on. Okay. What I did this week. So, I think you know this, but I have a 5-unit that I've been trying to sell and had it under contract once. They backed out day of closing because of financing. Had it under contract again. They backed out day before closing because they thought that running Airbnb was going to be too much time. And then, so now I took that off the market, reevaluating. I had a whole bunch of move outs. At one point, I had every unit full, or actually for the last 4 or 5 months. And it was actually,
but these were you were using it as midterms, right?
Midterms and Airbnbs, yeah. It was a mix.
Okay.
And it was generating roughly about $6,500 a month there for quite a few months. It was really nice. Now that I got all but 2 units vacant, I'm going through unit by unit and starting to do just some quick updates, touch up paint.
Refresh.
Yep. Doing refresh, updating the broken furniture that has broken just with wear and tear.
You mean one screw taken out of every piece of furniture?
That was so annoying. And kind of similar thing. But so I'm going through and doing these refreshes, and then going to redo all the photos, get it back up, refresh the listings also on Airbnb, which from what I've been told, if you refresh your listings and update the pictures and update the content, you'll automatically get a higher ranking on Airbnb the more that you update those listings.
Okay.
So I'm going to try that, do these updates and just see if there's more opportunity, bring the value up on the property so that way I can get it back on the market and sell it.
Dude, how do you feel about having something that you almost thought you had sold twice and then you still have it? Like, that is so annoying.
It's beyond frustrating.
Yeah, I'm like, will you just go away? I've had that happen so many times over the years.
The funny part was the second person that was buying it, I don't know if I mentioned this or not, but they're like 24 or 25 years old, and they didn't speak very good English, so we had a translator, and they made all their money on TikTok.
What?
Yeah, and they're buying the property for cash. And they had a pretty good size earnest deposit down to buy this. And then after me part of the contract was I had to spend a day with them to teach them how to do Airbnbs, and they wanted to do TikToks on running Airbnbs. And then he's like, this is a lot of work. You could just have my earnest deposit for me taking your time up.
Oh yeah, you never told me that. And I wonder if that guy like had a mild freak out on January 19th when they banned TikTok for like 20 minutes or whatever it was. Can you imagine?
I bet he did.
My daughter was losing her shit over TikTok. She does not have TikTok. Mm-hmm. But she somehow watches aggregated TikTok videos through like Pinterest. That's the only app we let her, mess around on. So she's got like 10,000 things on Pinterest. And she was just completely outraged about it. And actually her deal was not specifically the videos, but CapCut is a really popular.
My son's all over it.
Yeah, video editing software where you can create reels and edits and stuff like that. And I've used a similar one, although not CapCut. But that is, I think, still banned because it's the same ownership, Chinese ownership. And
my son's on CapCut daily.
Yeah, ask him because I'm pretty sure it's gone.
Really?
Yeah. Avery freaked out about it. She was so upset. She had like 1,000 videos that she had that are all gone now.
Interesting.
Uh-huh.
One thing I don't understand about this, and I guess I don't understand about our country, but I'm just going to take an overview. I'm not taking a side on this. I guess I kind of have a side on it. But if you prove that this app is hurting us in any way, right? And another country is getting our information, and it's more than any other app. If it was any other country, I feel like they wouldn't have this long 2, 3, 4 year process of getting rid of something. They would just ban it immediately, especially since they already said military can't have it and government officials can't have it for years, right? Why the hell does it take so long here to get something banned? And then all of a sudden it's gone for hours, comes back on with no explanation. And I think I've seen more nasty comments and posts about TikTok than I have most of the other stuff that he signed off on when he was signing all his
executive orders.
Presidential executive orders, yeah.
You're right. I think it just comes down to money. There's so many people that have monetized TikTok in one way or another that have probably lobbied or hired lobbyists. And there's also companies that are trying to jostle for position to buy it, like Mr. Beast was one. Who are some other ones that Elon Musk?
Elon Musk, I heard.
Yeah, his name was thrown around as a potential end buyer for it.
There was another big one.
Yeah, so it's I don't know, man. But I think if Musk did end up trying that, I think he would get lumped into like they would throw this into an antitrust thing because he'd be basically a monopoly on two really powerful social media platforms. So between him and Zuckerberg, it's like they own Instagram, Facebook, X, formerly known as Twitter, and then if TikTok was in there too, it'd be like I think that'd be a major problem and a stumbling block for him, but. We'll see what happens, man.
It's really, really interesting. And I just really hope I get some explanation on this. But the other aspect is the United States owning half of it or 51% of it.
Yep.
So what does that mean? That if the United States owns half of it, then they get half of our personal information?
Well, here's what I understand about it. It's the algorithm.
Yeah.
That is what they will not let go of. So the Chinese company that owns TikTok, and I'm totally spacing on the name here.
Something Dance, ByteDance.
Yes, that's right. ByteDance. Yeah. So ByteDance basically, like when they had to start this company, operating in China, they had to agree that the Chinese government had access to everything, every piece of data that was in their platform.
And the servers are held there currently.
So basically they're like, we can use this for whatever the hell we want. It's not a private company, and it's essentially nationalized, even though it's technically not. They're just like, we have access to all this stuff. Just know that. And so they're going around collecting all this, data and, forming profiles, and they use that for, to divide the country through, what their social media, experimentation on divisiveness with the U.S. I mean, it works like a charm.
I heard it's a California LLC though. That owns ByteDance.
Yeah,
but the servers are held
right. But it all comes back to the algorithm. Now, one thing about the whole 51%, that whole conversation that was happening evidently was centered around, if we do this, if we're majority owners, then we get the algorithm. They absolutely refuse that outright. Mm-hmm. So I think this is going to be a long, drawn out drama filled battle to see how that's going to work. There's a lot of money, and they have the best algorithm in the world on any platform out there. They have the best one. It's widely known. So, it'll be interesting to see how this all kind of like takes shape, and what the hell has our society become anyway with this? It's like, but it'd be funny to see how, if, not to throw shade here, but you always see like, all those realtors that are dancing and probably not just them, but real estate investors too. I'll lump myself in there, but I don't do any dancing. Nobody wants to see that.
Nope.
What is this going to mean for your business now when you can't just like be like, oh, I'm working, and you're spending 4 hours a day filming, 10-second videos and editing them? I don't know. It'll be, it's a brave new world out there. Sans TikTok.
I just don't get it. I don't have TikTok, and so I can't say that I'm addicted to it. But if any of my apps were like, hey, they're stealing all your personal information, I would want that off my phone immediately.
Yeah. So last week, topic change here. Last week, I had to, right before we were going to record, I was like in a panic. I left the REIA studio. We were just about ready to get hammered with, like 20 below wind chills. And we got like, there's a house that we have listed. It's a flip house, but it's more of a wholesale. We bought it. You actually brought it to me. We still haven't sold that thing.
No way.
Yeah. Cannot get it sold. So 1 million showings. We're going to have to probably pull it, do the work, whatever. So it keeps getting shown. And there's like one window above the garage that won't shut all the way.
Yeah.
So I don't know who is going through open houses and opening freaking windows in mid-January when it's 0 degrees out, but it keeps happening. So before this, I was like, oh shit, I have to run over there and get that closed. Cold weather. I did put a screw in it. Yeah. And I just right now got a picture from my agent with a picture of the window open above the garage. And I'm like, who is going through and opening windows? What are you psychos doing? Do that on a home inspection.
Yeah.
Or like you're once you have it under contract. Anyway, rant over.
So they broke the window?
Super annoying. No, it's not broken. It's just open. It won't shut.
Even with a screw in it.
I had to put a screw in it just so I could close it. So I grabbed it with a pair of pliers. I screwed in a screw, because it's like, I'd have to have a 12-foot ladder just to even reach it because it's right above the garage. Anyway, super annoying. So now I'm going to have to probably run over there again and get the stupid thing closed.
I've never done a showing.
I don't, me either. And it happens over and over again. I don't get it. Idiots everywhere.
I can't believe you still have that house.
I can't either.
That is an amazing
I'm going to
area.
take a horrible, horrible bath on that house. Thanks a lot.
Just make me feel more bad.
Well, the thing was, it was like, here's a case in point. We bought that house for $300,000. The ARV on it was $350,000. So not a huge spread there after you pay commissions and all that stuff. And but it seemed like a no-brainer. A really good area. I mean, it's right by our podcast studio here. We couldn't used to say that.
Right.
The old podcast studio, but a good area, 121st and Pacific. Anyway, we basically were going to wholesale it. So we cleaned it up, cleaned it out, got it, spiffy, and didn't do all the work because like some of the windows are older and things like that, just cosmetic stuff. But we probably had, 40 showings on it, and one offer that ended up falling through, another one that ended up backing out. So
state of the market.
Yep. But we're still getting a lot of showings. It's just morons keep opening the window and not being able to close it.
It just blows.
I just need to put a note on it. I just didn't have time. I was like trying to find the right tools and all that. And anyway, so there's that. You might find this interesting, Ted. So being the little bohemia aficionado that you are, we put an offer on the Prague Hotel on 13th.
I just had a conversation about the Prague Hotel yesterday.
Yeah. So offers in. By the time this airs, we'll know whether we got it or not.
They're offering. So they're asking $750,000, right?
$770.
Okay.
Yep. And we made a good offer.
Yep.
Pretty strong offer. And I think we're one of 5. And they were reviewing them, and I'm supposed to find out today that I'm recording to this.
So 11 apartments
above, 2 commercial bays on the main, historic building, really cool looking, right in Little Bow, super cool project. I hope we get it. It's kind of a trophy.
That area, that building, if you were able to get that, maybe, I'm guessing right immediately, it's probably not a huge cash flow, but as that area develops, that could be the most valuable building on that street, in my opinion.
So the interesting thing about that deal is, so let's dig into this a little bit. Like Ted said, it's a mixed-use building, 11 apartments above, really cool old property. It was built in 1898. A lot of history to it. It was like known as the only Czech, specifically Czech place in between Chicago and San Francisco for years and years. So a lot of history there with the, Little Bohemia, like we mentioned, a lot of immigrants lived in that area that had come from that area, Czechoslovakian folks that populated the area and so forth. And this is it's what's called the Prague Hotel, and it's like I said, mixed use building. You look at the financials on it though, and it had about roughly, I don't have it in front of me, but it was about 120,000 was the gross income. And then the operating expenses were really high, I thought, because the NOI ended up being like 45,000 is all. So that's a huge swing. I mean, that you're talking $80,000, almost $80,000, $75,000. So would have been ended up being like a 70% operating expense. So I started digging into that, and I'm like, why is this not cash flowing better? And the snow removal was a huge part of that. So I don't know if that was just like they continuously had to put salt down, or like the parking area in back was expensive to do. Maybe it just piled up there. I don't know, but there were some really high expenses that we looked into, and but it's also a little bit of a trophy. So you're not necessarily buying it because it's a killer deal. It's just a really, really cool, iconic property.
It is.
So I can't wait to see if we got that baby or not.
I was just literally meeting with a banker yesterday, and he was talking about somebody approached him to be a partner on that particular.
Oh, is that
property.
right? Yeah. Because we looked at it and I was like, I had always loved that building because of the look and the location, and walked by it a million times, never really paid a ton of attention to it. And then I saw that pop up on like Crexy or whatever. And I was like, oh my God, that's for sale. And I started looking at it, brought it to, the guys, and I was like, hey, this is a good, and it was at 770. And I was expecting like 1.5, 2 million. I had no idea what the numbers were going to be on it. And it was a lot cheaper than I thought, but now I know why, because the NOI isn't great. But
I grew up right behind it.
I know.
I'm so familiar with that building.
That's why I wanted to bring it up.
Yeah.
I figured you'd be all eyes and ears on that.
The architecture is just amazing.
Super cool. I'll update everybody to let you know if I'm super disappointed or really excited.
If there's a Facebook group that's like Nostalgic Omaha, it's about old time, and they did a whole post on that recently.
Yeah.
I don't know if you saw that or not.
I did not. There was I did join a group that was like Omaha History of Omaha or something like that. Is that what you're talking about?
Yeah.
I did. Yeah. I did. That's where I knew when it was built and the Czech thing.
What year was it built?
1898.
Okay. Because my house right there was built in 1885.
Okay. So right around that same, 10, 15 year period. But yeah, so I'm excited to see if we got that or not. If we don't, oh well, we took a pretty good swing at it with our offer.
I can't wait to see it.
Me too. And then let's see. I had this is kind of interesting. I wanted to bring this up. So I've been looking at one of my good friends has a property. I'm going to be a little bit vague about this, but he has a property. We'll call it 40 units, and it's in a sister city to Omaha. It's really cool. I've been stalking this property for like 5 years. I tried to buy it several times. I just kept getting, basically a Heisman by the owner. And then what happened was Metonic, who is a local, they're an Omaha area multifamily syndication company owned by the Selden family. And they buy a lot of bigger deals. They raise capital. They put their own capital into it. They're a very good operation, but they go for value add deals. And they started talking with the owner of that. So she got the idea like, oh, Metonic is looking. I'm going to jack my price up. So it went from like $2 million when I first started looking at it to like 3.5 to, whatever. I'm just like, okay.
Oh, wow.
And then all of a sudden my buddy buys it, and I didn't even know he bought it. And he told me, he's like, I'm like, you dick. I was like, how dare you? I don't care.
Yeah,
obviously I wasn't going to anyway, but
more surprised.
Yeah, he got it. And then he started dumping.
Was it at the high price or the lower price?
High.
Yeah. Okay.
Here's where I'm going with all this. So I had a lot of deferred maintenance. And then what happened was, several of the units were down because of a water issue, a plumbing, pretty bad plumbing issue. So there were like multiple units that, needed to be, redone. And it was, a little dated. It had kind of like 80s, 90s finishes in it. So the rents were probably, $150 to $200 low on a lot of them. But you're talking a lot of units and a lot of money to put them in. But like, just to give you a context, rents would be like $1,100 on the non-remodeled, and they'd be like $1,350 to $1,375 on the remodeled. So a pretty nice bump.
Yeah.
But you're talking like hundreds of thousands of dollars that you have to put into CapEx to, get the chiller, the plumbing work, all the unit turns and all that. And point being on all this is, by the time you add it all up, I hate to say it, but he overpaid by like not a little amount. And what he has to sell it for, or wants to sell it for, is more or less just to kind of get out of it and not, to kind of stop the bleeding and so forth. But we can't make the numbers work. So we put it through underwriting. I've been over there twice. I've been through a bunch of units, talked to them multiple times. And it's one of those things. It's like, it's worth what it's worth when it's you don't go off of comps, you go off of NOI, right? So whatever the property can kick off, you underwrite it, you figure out how much CapEx you're going to spend, meaning how much, unit remodel work are you going to have to put into, how many, air conditioners you're going to have to buy, et cetera, et cetera. And by the time you add all that up and then you put debt on it, and then even if you did refi at the end, you have to look at the new cash flow number or lack thereof, and it just won't pencil. So unfortunately, we can't really buy it for anywhere close than what he needs to have to make himself whole, and that's just break even. So that was kind of a bummer for both sides. I've always liked that property. It's a cool spot, good location. The units are huge, but I just can't make the numbers work.
I have a similar situation. I have a 4-unit I bought, and when I had a business partner with it, he's like, "Oh yeah, we can renovate this for $150,000, but it was at cost, with your partner." But then now that partnership's gone, that number's ballooned over to well over 380,000, and all of a sudden the numbers just don't work. And it's like, oh man, now what do? You feel like stuck.
I think that I have talked to more failed partnerships. And one of the most common threads that I see in real estate investing partnerships is partnerships with contractors that completely fall apart. That's the number one thing that I see over the years. I know you go into it with your eyes open and best intentions and think things are going to be good generally. And you've maybe worked with a contractor on several projects and they do a good job. And then you start saying, well, you can just do it at cost. And then we'll take what you would normally make on that, and then that'll offset what I'm putting into it and all that, right?
Yep.
But I'm always like, don't ever do that. Like, just hire your contractor. Don't do I'll trade this equity for that or whatever. It never works out, so both sides are happy. That's my opinion, just from hundreds of conversations like this, it seems like, over the years. But this leads me to another thing that I was thinking about the other day. I have worked with several crews of guys that, they'll move from one project of mine to the next. If I have a flip house, I can be like, hey, same paint color, same cabinet choices, same hardware, just do your thing. And then I don't have to be there as often because I know what to expect. I know what the finished product's going to be. It may take forever because I'm not staying on top of it, but I always see contractors that get enamored after working with flippers on multiple projects. They think that they want to be flippers themselves. And so they will then buy a property, take their crew, and move it over to their own project to the detriment of their own business. And now, are you going to make extra money by flipping this house? Maybe. But what if instead of doing that, you just allocated more people to your project, your customer's project, and you double down and don't divide your attention into flipping yourself? I think that's a dangerous road that contractors walk, and they chase the shiny object. And a lot of times that shiny object is a flip. And you have to think, when you're in the flipping business, a big part of that is deal flow and acquisitions. And are you the best person as a contractor to, be marketing, taking those calls? Like, it's a whole different skill set, and it's a whole different time activity that you're allocating, right? So I just think, I don't know, man. I go back and forth on this, but I just think if you're a contractor, be a contractor, and don't use your own contracting resources that are putting food on your table for your own stuff. I don't know. What say you?
I agree in a lot of aspects. I think that a lot of people are like, oh, what's the thing I'm weakest on? Especially if you're an investor, you've maybe looked at your past deals and you've just had tons of contractor issues, and then you get one that's good and you test them out and you're like, hey, this is the right one. And like, this is my weak point and I'm filling my weak point. But really, like you said, maybe that contractor is a good one, but maybe instead of depending on them putting the sweat equity into it, you guys have a partnership,
right?
And maybe you do use his contracting company, but you still pay them in full.
Exactly, you pay them exactly what they would normally charge you for that particular project,
and that's the right way to go at it.
Yeah,
and you probably have better luck to making it work.
I agree 100%. Now, one other final thing on this topic is I've noticed over doing this for a number of years that a lot of times if you try out a new contractor, so you get referred to somebody and maybe you heard they did a good job for Joe Smith, the flipper, and you're like, hey, could you take a look at this one? And they come in and they wow you. And they're like, oh yeah, like here's your detailed scope of work. Here's your blah, blah, blah. Here's what I can do. Here's all the guys I have. And then you get your project done and it looks great. And they got it done maybe on time or close to it. And they did what they said they were going to do. And then you use them 2, 3, and I think the right number is 4. I think it's your 4th project.
I 3, 4. Yep. I totally agree with you.
By that time,
the comfort level is too good.
They're not trying to impress you anymore, and they're falling to the level of their usual performance. And that is really where the indicator is on if that's somebody that you want to keep working on your projects, because you're not going to get their first project performance ever again, more than likely, unless they are completely tapped out for work in the middle of winter in Nebraska and they need a job, they need to get their guys working and so forth. But I think 3 to 4 projects, full, bigger projects, that will tell you what you're actually going to get moving forward. What do you think of that?
I never thought about it, but reflecting, I 100% agree with that. And
Yeah.
I think the number is 3.
I think it's 3. I think it's like halfway through 3 is about when the tables start turning and you kind of start seeing who they really are. I can't tell you how many times it seems like I don't know that I've ever had a contractor relationship that has gone great throughout the whole time. Otherwise, I'd still be using them. So just a tip for you as a contractor out there, listen to what I'm saying. And you may be like, oh, he doesn't know what the hell he's talking about. I'm telling you from my experience as the receiving the end of the customer here, this is what I see performance wise and why relationships end up going south.
And I'm the guy that's like doubles down, like, hey, you know what? Hey, you did a great job with that one. Hey, this property needs some doors put in. This property needs this bathroom and stuff and redone. And then this property, and all of a sudden, everything just goes haywire.
Yeah,
and nothing's getting done, and the timelines are shot, and you're like, I'm about to shoot my own self.
Yeah, yeah. I had to have kind of a tough text conversation with a contractor I've been working with, and I'm like, I don't feel like I've been getting your best performance on this project. Would you agree? And he's like, I can't really argue with that. And so it's kind of like the dad kid conversation, like if you can look me in the eyes and tell me that you did everything you could to make this project successful and go on time, then I'm good with that. Actually, either way they put it is not good. Because if they're saying, yeah, I could have done better, and I'm like, well, do better. Otherwise, I'm not going to keep using you.
I had that conversation just this week, and I'm having a in-depth conversation to follow that up later today.
Yeah.
So
it's never fun.
It's not fun,
but it's important.
Yeah.
And once you get it off your chest, I think you'll feel better too. So, well. Glad we cleared all that up. Solved a lot of world's problems.
Well, we're 32 minutes in this. It's probably getting to today's Golden Nugget. And this Golden Nugget is brought to you by JM Real Estate Capital.
Hi, it's Rob, JM Real Estate Capital. We're the money guys that you need to know for all your real estate investments. Talk to us. We can do what your local bank can't or won't do. We don't have millions. We have trillions with a T to lend. 844 we close, or go online jmrecapital.com. That's jmrecapital.com. JM Real Estate Capital, smart solutions for the real estate investor.
Okay, this is a little different than the topics we've been covering up to this point, and I thought I'd bring this up. This is a fun one. So, I give you shit all the time about ChatGPT and how nothing that I ever see in written format is actually your own words. Which I don't know that you could disagree with me.
I'm a terrible writer.
And so Ted always comes in and he's like, yeah, I wrote up this. And he'll hand you something. I'll be like,
I do write it up.
You wrote that?
I do write it up. And then I just have it make it better.
I am only doing that to give you crap. I actually think it is very useful. But so I just yesterday signed up for the beefed up version of it. So it's $20 a month. Or you're on that, right?
Yep, since day one.
So my golden nugget is do that and start using it. It's very complicated, right? You can use it for so many different things, and it's hard. You have to know how to build prompts. There's a lot of tips and tricks out there and ways to do it. So start following people that seem to know their stuff on it.
There's a really cool thing in there too, where you can actually create your own ChatGPT, where it memorizes everything. So I have one I'm creating right now, where I'm actually uploading all the text from every podcast we ever had.
Yeah.
And so eventually it'll know everything about our podcast. And then I can put it onto our future website that I'm getting redone right now. And it'll have its own AI bot. And you can put in any keyword, any question about anybody we've ever interviewed, and it'll answer it.
One of my partners in the lending business uses it all the time for email. I don't know if he built an integration somehow with it or if it's just like a copy paste thing, but he uses it to summarize really long or complicated emails that we tend to get a lot of those. So he'll just like copy paste it and be like, summarize this. And that way he knows what's important or what's not. And it started to learn like what the stuff that he needs to read right away and the stuff he doesn't. So that's one way to use it. But my golden nugget was, so they just launched a product with ChatGPT, which the majority share of that is owned by Microsoft. Open.ai is the, if you've never checked it out, where have you been? But check it out. And they have a new product that they launched called Sora. Sora. Have you messed with this?
I heard about it, but I'm not.
So Sora is something where you can write a text, basically on a description, a text description about what you would want to see in a video, and it'll create the video for you. And so like I just very quickly started using it last night I was just messing around. What I was trying to do was I was trying to come up with a video where Deadpool was doing demo on a flip house in the kitchen using swords and guns.
How'd it work out?
Not great. Not great at all. And then so I had to I was just constantly adding stuff to the prompt. I'm like, no, make it look more like the movie. You know, I'm like, I was just so frustrated by the end of it because it was giving me all this weird stuff. The person was just like dancing, or they were in a red suit, but it was like a leisure suit, not a superhero outfit. I was just like, what is going on? Is this what you think, you know, is this what AI thinks we want? Is just dancing idiots on there, which arguably TikTok.
Graphic design work is like terrible on there. Like it creates the coolest images, but like it always wants to put all these words everywhere in there, and the words are never spelled correctly. Or it's just so super frustrating.
So then I did like Wolverine and Thor. You know, I was just doing the Marvel characters, whatever. And I'll show some of these to you off air, but like it is bizarre, but it's fun. It's a fun world. I would say watch your time because it's a very big time suck if you get into that. But it's supposed to make you more efficient. But I just found myself wasting time trying to create funny little videos.
So Coca-Cola had like a Christmas commercial out, and it said created by AI, and it had the company written on there.
Oh yeah,
and it was like, and it was a big deal because it was the first all AI generated commercial. Was the polar bears and all that, right?
Oh sure, yeah.
And it was really sick. And I'm like, God, I go, what program are they using to be able to make it that seamless and perfect?
I know. It's one of those things too. It's like if you don't pay attention for like a month, there's going to be all new, tech that's out with this. It's just evolving so much faster than it ever used to. So just check that out. It's the beefed up version of it. It's $20 a month. And you can use it for some useful things in business. Ted uses it all the time to summarize, podcast guest backgrounds. It gives us some good questions to ask them and stuff like that. I just choose to ignore them.
I had used it last week for something. I have a website that I was building with somebody, and I needed to get out of this website. It's been a year, and it's just been a nightmare, right? And then they're like, we're not going to refund the money. We're not going to do anything. And they threw the terms and conditions at me. So I copied and pasted all the terms and conditions and threw it into ChatGPT. And then I took all the emails that they sent me from corporate, and I put that in there. And I was like, give me a legal response that gets me out of this based on their terms and conditions.
That's pretty clever.
Wrote me a legal letter.
Wow. Look at you go.
And then because of that, they immediately responded for my favor.
Huh. Look at you. Ted Kaasch, AI consultant.
Yeah.
I think that's your newest business model, buddy.
Let's do it.
All right.
Well, if you listen to us for the first time or the 182nd time, we really appreciate if you leave us a 5-star review on whatever format that you do listen to. And it would be super awesome if you leave us a written review, because we love to read those out and shout you guys out for leaving those.
Heck yeah, we do.
And the best thing you can do for us and the show is to share this with somebody that would get something out of this. I'm sure there's something out of here that somebody could get out of it, and we really appreciate that. But with that, Owen Dashner, we see us out.
On behalf of REIA Radio, Aiden Bear, and Ted Kaasch, I'm Owen Dashner, and you've been listening to the Real Estate Rundown.
This episode is also brought to you by PropStream and Magic Door.
What are you doing?
was just listening. You're like the real estate rundown. I liked how you're saying that. I thought you were going to go with it. If I don't say
You usually chime in with me. That's our thing.
Most times I do.
What are you doing?
Real estate rundown. The real estate rundown. Sign off.